Hi, Ketan. Hi, Dharya. Am I audible?
Yes, Neil, we can hear you.
Yes. So we'll
Yes.
begin
Hi.
about. Hi, Ketan. We'll begin in about 5 minutes. Dharya, could you drop a message? We'll start in about 5 minutes.
Yeah, perfect, perfect.
So, folks, as we are waiting to begin, if you could, in the comment section, share some details about yourself. Dharya, could you just mention some of the things that we are looking to discuss?
Yes, 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 sure.
And also, any questions that you have, you can ask them as we are presenting in the comments. We'll take them up on a first come, first serve basis. So don't wait until the end because you might forget the question. Just type it in and we'll take it in sequential order once the presentation is done. Okay, Dharya, I think we can begin. It's 11:05 and we should not
Yeah,
extend the
yeah,
time.
we can. Yes, let's go ahead.
All right. Hello, everyone, and welcome to this first session on EPF and how you can use it to finance your home buying. We'll be doing many more of these, so please do join us for those also on different subjects like tax and global investing. But because EPF is kind of our bread and butter, so we are beginning from there. And we have my colleague Ketan, who is the expert here, who will guide you through the basics of it. He'll take just maybe 15 minutes in the presentation, and we'll head straight to questions to maximize the time for questions. And after the session, if you use our service, there is certain things that we can offer to you. So Ketan will take you through that. But before Ketan starts, just give you a bit of a background on EPF and sort of my own journey with EPF. As many of you might know, I've been a personal finance journalist for most of my career, and the one case that sort of changed my life forever was Naveen Fernandez's case. Um, he was a gentleman who worked in finance, who had had a career in finance, and we had gone to interview him about his financial planning in the last stage of his life. So he had cancer, and in that interview, it came to light that his provident fund was despite having cancer, he was not able to withdraw. And after the article came out and it went viral, the PF department got in touch and he got his money back. And that prompted me to really think about this area and eventually to move to FinRight and launch the fine print. So it is something that we often ignore. It's our money, it's deducted from our salary. Sometimes we just discount it, it's too small or it's too complicated, we don't want to deal with it. But actually, if it's used properly, it can build a lot of wealth and it can help finance us at crucial stages like home buying, like health even. So without further ado, Ketan.
All right. Hi, everyone. Hope you're having a good morning. So I'll keep it very brief and quickly walk you through. Let's first get started with PF Basic. I'm sure most of you already know this, so I'll be brief about it. What is EPF? It is sort of our social security. It's something that is mandated by the government. All salaried employees working in an organization with more than 20 employees are contributing to EPF. Now, how much are you contributing? So essentially, there are two components. One is the employee component that is deducted from your salary, and the employer component, which the employer matches. So both you can see is 12% of your basic plus DA. This is the basic that you need to know about PF contributions. And quickly, why do you invest in PF? Is because you're getting an interest, which is essentially tax free and risk free in a way. You're getting 8.25% interest, which has been announced for this year. So, talking more about some of the benefits of EPF, the biggest one of it is it's categorized as triple E. It is exempt, exempt, exempt. So essentially, your contributions that you're putting into EPF, the employee contribution, it qualifies for a ATC deduction. So, if you fall under the old regime, then you're getting a benefit there, and the employer component of it as well. Since it is not part of your CTC, it is also getting exemption while contributing. The second exemption is on the interest. So if you're contributing anywhere between 0 to 2.5 lakhs per annum, the interest that you earn on that corpus, that is tax free. And the final exemption, which I'm sure a lot of you will be experiencing, is regarding your withdrawals. So if your total service that you've contributed to PF is more than 5 years, then the withdrawals also are exempted from any taxation. All right. Um, so if some of you have had the privilege of logging into the EPFO portal and have gone for filing the withdrawal, then you must have seen this huge list of eligibility withdrawal categories. And if you don't know the eligibility and what you're applying for, like I believe it's like playing the Russian roulette. You don't know what you're going to get. But anyways, jokes aside, we'll get to this categories. What are these categories? How do you go for withdrawal? And so I've categorized the major withdrawal categories into few buckets. The first one, like you can see on your screen, is marriage and education. So essentially, if you are getting married or your kids are getting married, you are eligible to withdraw a certain part of your employee share. For that, you need to have 7 years of service. Yeah, that is 7 years of PF contributions altogether. In this, the eligibility is you can withdraw up to 50% of the employee share. And like I mentioned, the source is going to be just the employee share. A point to note here is that you are allowed this withdrawal for only 3 times in your lifetime. So you have to use it carefully. Next one, which is for medical treatment for yourself or your family's hospitalization, you can withdraw up to 6 times your basic plus DA, which is considered as technically EPF wages. So 6 months contribution, you can withdraw at once. Again, this is only getting deducted from your employee share, right? And the major category or the conversation about today, it's going to be around home purchase or construction of a house. For this, you need at least 5 years of service. And the eligibility criteria limit is up to 36 months of your salary, which is basic plus DA. Now, interestingly, in this, you can withdraw both the employee and the employer share of it. And we'll talk about these options in detail because there are a lot of options just for house purchase and flat. Some people also get confused with that, which we'll discuss in just after this. And EPFO does also provide you the provision of withdrawing for repaying your home loan. For this, you have to have at least 10 years of EPF service. And the limit here is the same, which is the maximum limit that you're going to get in PF is up to 36 times your basic salary plus DA. Again, in this also, the employee and the employer share can be withdrawn. And finally, there is an option of renovation, alteration, and all of that, which comes in after 5 years after you've applied for the home purchase or construction. After 5 years of that, you can apply for a renovation. In this, you're going to get up to 12 times your monthly salary. And again, this is only going to come from the employee share. All right. I hope so far so good, and you guys are sending out questions. We'll talk about the options that are there for specifically for home purchase or withdrawal. Now, uh, technically, there are so many options that you get. In fact, in the screenshot that I had shared, there are multiple options, which is purchase of a house or a flat from an agency. In this case, the payment is actually made to the agency, and documentations, it's all self-declaration. Now, the next option is purchase of a site for construction or dwelling of a house. For this, the if you're buying it from an individual, the payment is made to the member, the person who's applying the claim.
Sorry,
Right.
Ketan, do you want to switch to the next slide or same slide?
Are you guys able to see my screen?
Yeah, is it this one or the one after this you wanted to?
We will come to this part of it. Okay. All right. So there is an option of purchase or dwelling of a house in which you're getting the option of with getting it from the promoter if you're buying a house from the promoter, and then there's a construction of house, then repayment and renovation. So these are all the options. Technically, somewhere you're paying to either yourself or the agency. Now, some of the questions that might arise in your mind, I've collected the official answers from EPFO's FAQ website. So, are you required to give any documents for going for a withdrawal claim? Well, the EPF says that you don't have to provide any supporting documents. The act of you applying for advance claim is taken as a self-declaration while you're applying, right? And we discuss about payment to agencies and all of that. So in this case, unfortunately, I checked this and the PF, can you apply for an advance claim where the payment is credited to the agency's bank account directly? Well, you cannot apply it online. Technically, EPF will get, you'll get a rejection even if you apply. But like I showed in the screenshot earlier, as you can see, there's an option for applying from agency. So this is a pro tip. You should not opt for this option because it's going to get rejected eventually. Um, then this is something that Neil and I, we've discussed sometimes an issue, should you really repay your home loan with EPF? So here are a few considerations that you should keep in mind. Number one, that it breaks the compounding. So in EPF, unfortunately, there is no option to repay whatever amount that you have withdrawn so that your savings are intact. So this is, while you're withdrawing, you have to keep that in mind that this is a non-refundable advance. That is, you cannot go back and deposit the money to get the interest, to continue the interest, right? And the option to withdraw money for paying your home loan or for applying for a construction of house or any of those categories, it is only a one-time facility. You cannot apply for getting the same claim again. The point here is that, let's say you have applied the claim prematurely, that's early in your career, then you cannot go ahead and apply in the later parts of it. The problem that happens here is you can still withdraw the employee share that you're contributing, but the employer portion of it, that is what the company is, contributing to PS, that will remain blocked unless you are, until you are retired or you you don't have a job for more than 2 months, in which case you can withdraw the PF corpus entirely. And let's talk about loan repayment cycle. So essentially, if you are in the early stages of your home loan, then withdrawing your PF and repaying your home loan will benefit you because the interest that you're paying for home loan will go down. But if you're in the very later stages of your home loan repayment cycle, then probably a majority of your EMI is getting redirected towards your principal amount. So you're not going to save much on interest. And the last point here to consider is to compare the interest that you're getting on your EPF versus the home loan EMI. Usually, the home loan ranges between somewhere between 7.5 to 9%, and the interest that you're getting on EPF is 8.25%. So, the key consideration here becomes: are you getting any tax benefits on this home loan? So if you're in the older regime and you're getting some benefits, then effectively your interest rate for home loan is lower than the interest that you're getting on LPF. So that is something that you should keep in mind. Then here's a pre-withdrawal checklist, or sort of things to take care of before you're going for applying the claim. The very first point is, are you able to log into the EPF portal? Unfortunately, some of you on this call might also be facing some challenges with logging into the EPF portal. So we'll discuss in brief about that. But first point is, are you able to log into the EPF portal? Second is your UAN KYC compliant, as in your Aadhaar, PAN, and bank details, are they properly seeded? And whether or not your details on your UAN, Aadhaar, and bank match. In case they don't, there's a chance for a rejection. And third point, which I'm sure a lot of people are not aware of, is whether your service is consolidated into your current account. So what I mean by this, if you have worked for multiple organizations, then it is essential that you transfer the PF corpus from all the previous companies into your current company and then go for a withdrawal. Let's say you have 8 years of service. Technically, you are eligible for withdrawing for home purchase, but if your service is not consolidated from all previous organization into the last one, your claim will get rejected with the reason saying your service is insufficient, because technically if you have not merged the account, then only the service from the current organization is considered. And the fourth point here is, do you meet the eligibility criteria, the number of years of service that you have for the reason that you're trying to withdraw? Right? Fortunately, EPF has implemented some basic checks where if you're not eligible for it based on your service history, you won't be able to apply. But that is something that you have to keep in mind. Last, the major point, which so far at FinRate, we've seen around 50% of our customers have faced challenges with EPS, or the Employee Pension Scheme. And in this EPS, what you have to identify is whether or not you're eligible for EPS, and whether, if you're eligible, are you continuously contributing to EPS? Let me know in the chat if you want me to talk about a little bit more about EPS eligibility and continuity, and we'll get to that. And lastly, the point that we discussed, have you checked the long-term impact of compounding, breaking, and all of that before you're applying for the withdrawal? Because this is an essentially non-refundable withdrawal. So with that, I'll open it up to some questions.
Yeah, Ketan. So
Yeah.
we'll go sequentially. Before that, I'll just add a quick note that although in most cases you will find that the home loan interest after accounting for tax tends to be lower than the EPF interest, there could be two valid reasons to withdraw. One is psychological. None of us like to have a loan over our heads, and that can be measured in money. So if that's something that's bothering you, that you want to get off your chest, then yes, please do withdraw from EPF and pay off the loan.
Absolutely.
I think the second one is the concern around EPF withdrawal to begin with, that when you do need the money, what if there's a rejection, and can you just preemptively withdraw, have the money safe in your bank account and use it for whatever purpose you want? And I think that's also a valid concern given the number of rejections that are there. So with that, let me just go sequence. Daria, can you read out each question in a sequential manner?
Yes, sure. I'll. So the first question is from Vishal. The question is, I am planning to buy an apartment in Noida. Wanted to understand how and how much can I pull out of from EPFO. Also, is it advisable to pull out this money? I am a software professional with 12 years of experience.
Okay. So, fair question, Vishal. And we've discussed the eligibility criteria, but I'll walk you through it again. So essentially, you are eligible to withdraw 36 times your monthly wages, your basic plus DA. So that is the maximum eligibility that you get, provided you have over 5 years of contributions in PF. So that will be the limit. You can log into your EPF passbook and look for EPF wages column, which will tell you the monthly salary that you're contributing as per EPFO. And 36 times of it is what you're eligible for, and whether or not it is advisable to pull out money. Neil mentioned a few concerning points, whether it's a psychological pressure on you and some of us don't want to keep that. Then definitely if you fall in that category and you want to withdraw, sure. And check whether you're going to take a loan out of it, whether it is for a down payment. uh, these are some of the considerations that you should put in for withdrawing your PF. Neil, you want to add something to this?
No, I think those two are the main ones. So, if you'd like to book a detailed consultation on this, we do have a service, because many of you would have individual circumstances which we can't necessarily address in a session like this. So, Ketan, I think it's a good uh, point to mention the service that we have. So it's called the TheFynPrint Assist. The QR code is over there. You can scan it. We are launching it from Monday onwards. Um, so although you can check it out right now, we will activate this from Monday onwards. And essentially, it's a 1 hour consultation that you can book. The fee that we're charging is 999, and it's basically to help you solve some of these questions and to help you do it yourself, to do the withdrawal part yourself. um, if you need a detail, if you need somebody to do it for you end to end, then of course FinRight has the full service. um, and that you can discuss in that initial call, but this is just the sort of initial 1 hour consultation that we're launching from Monday. Ketan, you want to add to this?
Yeah. So, like Neil mentioned, uh, this webinar is, our way of creating more awareness about EPF issues and how you can withdraw, what you can withdraw. But throughout, our journey, we've experienced that every case is unique, and you might have issues which you are not even aware of. So, like Neil mentioned, there are a few unfortunate situations that I've seen, whether you are in a rush for getting some money, and there are some underlying issues which require coordination through your employers with the PF office, and it's a nightmare because you are in a situation where you need the funds, but unless you rectify those errors, you won't be able to access those funds. So it's better to be safe than sorry. And if you are facing some challenges already, this is a good opportunity for you to connect with us one on one. And yeah, that's it.
Yes, so this is the QR code. Shall we go to the next question?
Yeah. So second question is from Kritika. Hi Neil, thanks for the webinar. I have three questions. Really wanting answer on. Question one. Assuming now EPF interest continues until age of 58 for all, continues beyond that if contribution continues. Okay. Is there a way international workers can withdraw EPF before age 58? And third question is partial EPF withdrawal are tax free for a few purposes. How easy is it to apply and get this money?
Okay, I will let Ketan take the second one on international workers. On the third, how easy is it? If all of your KYC is in order, if your name and other details are the same on your UAN and your Aadhaar, then it should not be an issue ideally. But if you are facing a rejection, we are there to help. On the first question, so you can take the EPS pension as early as age 50. 58 is the normal age of retirement. So if you advance it, you get a lower pension. You can even defer it to the age of 60 and get a slightly higher pension. But it has to be between the age of 50 and 60. Even on international workers.
Yeah. I think first question also talked about the interest part of it. So it's important to put out there that whether if you're not contributing to PF, the interest that you on your PF corpus will become taxable. So that is a key consideration that you should have. And on international workers, you can apply for an advance withdrawal. Yes, you are eligible for advance, but you won't be able to withdraw the full and final amount from PF until you turn 58. and few international workers, they may or may not have Aadhaar. So depending on that, it's either online or a completely offline process.
Yeah, yeah. So the interest does continue until the age of 58. A lot of people think that it's only 3 years, and that was the case earlier. But in 2016, the EPFO took out a circular which clarified that even if you don't withdraw, even if you leave the balance just sitting there in the EPF account, it continues to earn interest until the age of 58. Do note that the interest becomes taxable the moment you leave service, the moment you leave work. Uh, and work is defined here as work under an EPF fund company. So self-employment does not count. Small companies which are not part of EPF, they don't count. You have to be part of an EPF, administered company. Then your interest remains tax-free.
Correct.
Okay. So now third question is from Arvind. I have EPF on company, trust managed. I have an idea to invest on land. It is possible to withdraw EPF for buying a land.
Yes, you can withdraw. But since it's a trust organization, just make sure whether you're not your corpus from previous companies is transferred into the trust. And since it is a trust, you will have to go and apply on either the trust portal, or you will have to go and apply through email, whatever the trust provides. But you can withdraw money for your land.
You can't apply through the EPFO website, right?
Correct, you cannot. It's if the money is with the trust, you cannot apply through EPF website.
And it's 24 months wages, right? Basic plus DA.
Yes, for purchase of a land or site, it is 24 times your basic plus DA.
Okay, next.
So next question is from Yugal. To what extent can the basic component constitute the total salary?
So that depends on your employer. Typically, basic is placed at 30% of the C2C, because when they increase basic, they also have to pay more gratuity, and employees don't like that. So there are some employers you will find that they deduct just 1,800 rupees per month, and that is the bare minimum under the EPF, because there's a provision in the EPF which says that employers can limit the EPF deduction to this amount, 1,800 rupees per month, which is matched by 1,800 from their side. So it's a very, very low amount. That's one category of employers. The other category, like I said, is people who keep the basic at 30 or 35, 40% of your total C2C, and they deducted at 12% of your basic. So if your basic is, let's say, really high, let's say it's 1 lakh, then 12,000 rupees is being deducted every month. And then I think those are the only two. I don't think anybody keeps the basic at 100% of C2C.
Right. And I think there's some new regulations coming in where your basic will be 50% of your overall salary component.
Yeah, so the government passed two new laws, the Code on Wages and the Code on Social Security, which have this provision. However, they have not notified this provision so far. So some companies have proactively complied with it and said, we will set basic at 50% of C2C. But so far, it's not a legal requirement.
Right. And I'll just add one small point to it. Some companies, like you mentioned, are contributing on the bare minimum. And in fact, some companies are giving you the option either to choose between the bare minimum contribution in PF versus the actual contribution. Point to note here that I'll put out there is if you are opting for a lower contribution to PF, essentially your withdrawal strategy, it's possible that you've contributed at a higher option previously, but now you're contributing as per 15,000 wages and 1,800 monthly contribution. In that case, even though you have a larger corpus behind, you won't be able to withdraw much because, like I mentioned, the eligibility is based on 36 months of your wages. And if your wages are capped at 15,000, that hugely restricts your PF withdrawable corpus. So if you've been contributing at a higher wage, please do continue contributing at a higher wage. Do not switch to 15,000. Otherwise, the ability to withdraw your PF corpus will go down.
All right, next one.
So the next question is from Abhijit Nair. The 2.5 lakh contribution exemption, does it only include employee contribution or is it employee plus employer?
So this is just for the employee contribution. Whatever you're contributing to PF up to 2.5 lakhs, the interest earned on it is tax free. For the employer, I think there's a limit of 7.5 lakhs, but it also includes your NPS contributions as well.
Okay. The next question is from Rajan. The PF contribution was transferred from our company's trust to the EPFO, but no interest has been paid by EPFO for past 2.5 years. Grievance was raised, and the response indicated that their central team is investigating the issue, but no resolution has been provided yet.
All right. Um, so Rajan, I think it's a very specific issue, which unfortunately some of people who have transferred from a trust to EPFO face. So in this, one point that you would have to check is whether or not your PF balance is accurately reflecting in the current company. Because what's happening behind the scenes is the money that is getting transferred from the trust to the EPFO, it is transferred in a bulk way where for let's say 10, 15 employees, it is put together to EPFO, and then there's a process of identifying how much actually belong to you, and then it is added to your account. But if your PF amount has been added to your passbook in the company that you're working for, then definitely the interest will be credited. But if there has been a delay in the transition, whether the amount got credited later on or whether or not it has been credited into your passbook, then definitely there's a bigger challenge which needs to be directly coordinated with EPFO.
So the next question is from Upendra Nath. Hi, thank you for the webinar. My question is, I have 8 years of experience and currently working in my organization from 2 years. When I raised the PF request, it rejected saying my service is less than 5 years. How can I tackle this?
Right. So essentially, this was part of our checklist that we had discussed, in which unless you consolidate the amount from your previous organization into the current organization, you will get a rejection which states you don't have enough service. So in the third point, you have to transfer the PF corpus from your previous organization into your current one, and then your entire 8 years service will be counted and you'll be able to withdraw.
Okay, so the next question is from Siva Subramaniam. Can I take loan from PF and deposit back instead of withdrawal?
No, Shiva, that is unfortunately not possible. Some countries do allow it for their social security programs, but EPFO has no provision of returning the withdrawn money. It's considered as a technically non-refundable advance.
Okay, so now the next question is from Vishal. Latest update of 2025 says we can withdraw up to 90% for home purchase. Can you confirm, please?
So
Okay, so
I think, yeah,
I'll
Nitin.
clarify on this. Being from the media ecosystem, it originated from somebody's online story, one of the major publications. And we were also surprised to see this because there was no formal notification from the EPFO saying this. So I reached out to a commissioner that I know and I asked, and he said no such change has been made. This 90% thing actually is a much older provision from 2017, and it applies to a limited case where there is a housing society involved, and I mean, the transaction is part of the society, like you're doing it as a group. It's a very, very limited set of people who it applies to, and it's not new. It's been there for a long time. For the vast majority of people, it is 36 times your basic plus dearness allowance.
Right. And some people also get confused because it was reported that you need 3 years of service now to withdraw the component for your home loan, but that still remains as 5 years. You should be eligible for minimum contribution of 5 years in PF.
Okay, the next question is from Rajan again. If the interest, including the previous interest, is paid in financial year 25-26, how should the tax portion for amounts above 2.5 lakh limit contribution can be handled? Should the entire interest be considered as income from other sources in financial year 25-26?
So, Rajan, essentially, the way EPFO has structured this is all contributions up to 2.5 lakhs is kept in a separate bucket or separate account for consideration. And any interest that you earn beyond the contribution of 2.5 lakhs is separately held, and your interest on, let's say you've contributed 3 lakhs in a year. So up to 2.5, whatever interest you're earning is tax free, but the interest that you earn on the above 50,000 above the limit, that will be treated as income. So only the interest that you've earned on that 50,000 in this example will be treated as income and have to be reported.
Okay, the next question is from Siddharth. Does anyone need to be employed when availing any of the withdrawal options listed here?
Well, technically speaking, EPFO advanced withdrawals are allowed when your date of exit is not applied, as in you haven't left an organization. It's essentially you're working, but you can still go for a withdrawal, advanced withdrawal. That should not be a problem. At least in specific cases of illness and all of that, those usually get through, even if your date of exit is applied, because it's for medical emergencies.
Okay, so next question is from Kamal. 54 years and above can withdraw 90%? Question mark.
Yes, you can. There is a provision for withdrawing 90% of your corpus before retirement. This is a one-time option.
Okay, so next question is anonymous.
Sorry,
What
Ketan, is this for unemployment or is this because age has crossed 50?
You've crossed 54 years of age, then you can apply.
I see.
Yeah.
Okay, so next question is anonymous. What is the purpose of EPS amount debited? Who is eligible for EPS deduction? And last question is, how can we get our EPS money back if we are not eligible?
Okay. So I'll explain the EPS eligibility. So this goes back to 1st September 2014. If you have started working after 1st September 2014 and your basic salary is above 15,000 per month, then you are not eligible for EPS. I'll repeat that again. If you joined PF, technically an EPF organization, and started contributing to PF after the 1st of September 2014 and your monthly salary is above 15,000, then you're not eligible for EPS. If at the time of joining your wages were below 15,000 per month, then you will be a EPS member. And if you've joined before 1st September 2014, then also you will be an EPS member. Now that is regarding the eligibility. And second point that people should know about EPS is, like we have mentioned, continuity. So continuity states that if you have become a member once of EPS, you will continue to be a member of EPS. Even though your salary increases beyond 15,000, you will still contribute to EPS. And how to get your EPS money back if you're not eligible? In that case, it's you have to reach out to the company and first of all identify if whether or not you're eligible, because it spans across multiple companies and all of that. So if you are eligible and a company has not deducted, that is a problem. If you are not eligible and the company has deducted EPS, again that will be a problem. So in this case, you have to approach your company and ask for a correction, and the money has to either be reversed into employer share or go out from the employer share.
And if all of this sounds daunting, then FinRight will do it for you. So don't worry about that.
Perfect. So next question is Satyajit. I am planning to send my kid for higher education. Can I show my PF settlement amount as proof of living expense? Will I get a letter? Will I get such a letter, or do I recommend withdraw money from my account? Also, I am working, so how many money can I withdraw?
Okay. Interesting question. But EPF does not, provide any letters stating, this much amount is there in your PF, which you are eligible for expense for your kids' education. I'm not sure, Neil, you can talk more about it if international, universities will. Yeah.
I think the best way to prove it is to show a passbook copy, download or take a screenshot of your passbook, and just state the rule which says that you can withdraw so much for higher education. How much is the amount, Ketan? I've forgotten now.
It is 50% of the employee share or 50% of whatever you've contributed so far in PF. And the eligibility criteria kicks in if you have more than 7 years of continuous service in PF.
Yeah, so provided you meet these two conditions, you can just cite the rule and download the passbook. That should be sufficient proof.
Sure. And obviously, you can withdraw the amount if you choose to, and it will be there in the bank account, which will be treated as proof.
Yeah.
Okay, so moving on to next question. How does tax regime impact EPF contribution and taxation? Any formalities to be done with respect to EPF if someone is planning to change tax regime from old to new?
Okay. How
Mm,
does tax regime impact EPF contribution? So essentially, you get an exemption in your contributions. Um, the employee share, like I mentioned, if you're in the old regime, you can get it under ATC exemption. And the employer portion of it is anyways not part of the CTC or your annual compensation, so it is not getting reported for taxes. So that is exempted. Employer is exempted in both new and old. And if you're in old, the employee contribution can be claimed under ATC. So that is regarding contributions and people who are willing to change tax regime from old to new. The key consideration, like I mentioned, if you're anyways maxing out ATC and depends on your salary brackets and tax brackets as well. So a little bit more subjective to answer here.
Okay, so next question again is anonymous. Is it mandatory to get PAN verified for PF withdrawal? As I read, there will be more tax deducted if you withdraw off without.
Yes, your PAN should be seeded in your UAN account. If you don't have a PAN, you will attract very high TDS up to 34%, 35%.
Next question, anonymous. If you make an advance claim from your EPF account, where you have both taxable and non-taxable corpus, from which corpus does EPFO make this payout first from?
So technically, there's no distinction. I've had this question previously where people have asked me, there's a component that is above the threshold. Can I take that corpus out and, leave the non-taxable corpus out? But there's no provision for it, unfortunately.
So दोनों से proportionate होता है मतलब.
Yeah, yeah.
Okay, so TK, next question is from Siddharth again. Does the compounding on interest stop after 3 years in case you quit the company?
Yes, you will continue to get interest. Your, compounding will not stop. So the threshold that is determined is at the age of 55. If you've left the job before 55, you will continue to get interest till 58. But if you have quit after 55, let's say at 57, then you will get only for the 3 years after that. So up to 60. I hope that clarifies.
Yeah, so in short, compounding does not stop, but the interest becomes taxable.
Yeah.
So the next question is from Yugal. Does EPFO department itself deduct TDS on interest against more than 2.5 lakh contribution?
Yes, there's a 10% TDS on the interest that you earn on contribution above 2.5. And see, the point here is you've only paid 10% as tax reduction at source. If you are falling in the higher tax bracket, then please declare this as income and pay whatever is the remaining amount that needs to be paid.
Perfect. So next question is from Tushar. Like EPF, can EPS also be withdrawn beforehand?
So EPS can only be withdrawn if you have left the organization and you're not working. Also, there's another criteria whether or not your total service is lesser than 10 years. If you have service less than 10 years, then you can withdraw the EPS. If the service or EPS is more than 10 years, then you have to apply for a monthly pension after you turn 58.
So that is a good reason to take a sabbatical before you complete 10 years somewhere. Take out the EPS money and go chill.
So yeah, because EPS, you're not getting any interest on it, by the way. Interest is only credited on your PF corpus, not your EPS corpus.
Yeah. So moving on to next, how can we merge our old organization EPF with current organization?
So the application process is simple. If you're able to log into the PF portal, go to online services and apply for one member, one EPF transfer request. And technically the request will get applied. And if you're facing challenges with either applying or some rejections, then feel free to reach out. We've shared the fine print assist. It is just for the people who joined in late. We are going to make this live tomorrow, and from Mondays you can start booking slots if you're interested in this. You'll get essentially a one-on-one consultation with PF experts where you can discuss your EPF case in detail and get a solution on what needs to be done.
And it's priced at 999 rupees.
Yes.
Yeah. So next question is for Sadar from Sadar. My last organization wrongly gave me EPS even when I was not eligible, due to which my current organization is also giving me EPS. How to close it, as I want to withdraw some money from my EPF account?
Okay. So if both the organizations have made a mistake in terms of contributing to EPS, then unfortunately both have to do the correction. Make sure you understand the eligibility criteria before even thinking of making a correction, because if the eligibility is incorrect and you've made a correction, then that's another nightmare. But essentially, the company has to do a correction, but you'll have to justify, you're not an EPS member in both the accounts. And after the correction has been made, you'll have to merge the accounts and then go for a withdrawal for maximum amount. Before that,
In this case, better to take FinRight's assistance. It's not going to be easy.
well, I'll just put it out there for people who are there, stuck with this EPS correction issue. Based on our experience, it is anywhere between a 3 to 6 months or even more, depending on the size of the company that you are working in. The larger the organization, the more people will have issues. If more people have issues, you are in a waiting line till correction is done.
Yes. So next question is from Abhinandan. Is the EPF corpus can be used in getting loan from bank for home or any other reason, as bank can use it for as a collateral?
Um,
No.
no, you cannot use your EPF corpus as collateral for any loan. You can withdraw the amount and then you can probably.
In fact, there's a legal provision which says that the EPF corpus cannot be attached by any bank, by any civil court in India. So it just can't be used as collateral.
Next question is anonymous. I have 10 plus years of service, planning to move abroad and might be out of work for a few months. Can I withdraw my PF in this case?
Yes, if you're moving out of the country, you can withdraw the PF. Technically, you don't even have to wait for 2 months. You can file right away.
Yeah, so there are two different grounds of withdrawal that become available to you. One is moving out of India, which is a specific ground of withdrawal, but that might need you to give the visa and passport and things. The other is the unemployment ground, which does not need any proof, just 2 months of non-contribution, and you are technically unemployed.
Correct.
Okay, so next question is from Rohit. Hi, is it advisable to withdraw the entire PF from previous organization rather than transferring it to new one to pay your obligation?
Okay. So I'll put forth, it's a very interesting question. There are two key considerations that come to this. One is the taxation angle, and second is the compounding angle. So if you're withdrawing the entire corpus from your previous organization, then it is essentially resetting your tax cycle. And every time you withdraw before 5 years of completion in PF, then you're paying tax on it. The entire PF corpus becomes taxable, and you end up paying probably 30% if you're in the higher tax bracket. So always better if you have lesser than 5 years of service to keep merging in and making sure that you're getting the entire tax benefit. Second part of it is compounding. If you withdraw, you lose out, the entire compounding, which is a very powerful tool for EPF if you keep it for the long term.
Yeah, so better to merge than to withdraw. If you want to withdraw, merge it first, the whole thing into the latest one, then withdraw.
Correct.
Yeah. So next question is from Prakash. Currently, what is the max contribution one can make in a given year?
From a tax standpoint, if you want to avoid taxes, keep it under 2.5 lakhs in a year. Otherwise, there's no limit on how much you can contribute. In fact, you can opt for a VPF and go up to 100% of the basic.
Okay. So next question is anonymous. I am 41, working in private and planning to retire and do business by 43. I don't want to withdraw PF till 60. Will the PF continue to accumulate interest and how is the tax implication? Uh, can I continue to contribute my own funds from 43 to 60?
So you are going to get interest till the age of 58. But the consideration here is whatever interest you're going to earn, it's going to be taxed. So that's that. And can you contribute on your own to the PF corpus? No, you cannot contribute to PF if you're not working somewhere.
Yeah, for that there is PPF, Public Provident Fund. Just want to clarify, there are two areas of tax. People are familiar with the 2.5 lakh limit, but people are not familiar, unfortunately, with the unemployment situation. So again, to repeat, the moment you leave a company that is governed by EPF, your interest becomes fully taxable. If you just leave the money sitting there, it will earn interest year after year for maybe even decades. But every year you're supposed to report that interest and pay tax on it. So the net interest goes down. If it's 8.25 gross, then the net probably comes to 5 point something, depending on your tax line.
Correct. But if you're an entrepreneur who's starting out on your own, so probably you won't have salary income for a while. So
Then it may not matter so much. Yes.
yeah, yeah.
So next is from Mohit. I have transferred my PF from previous firm PF account to the current PF account. Do I need to make specific request or check to make sure that EPS history is also transferred? Also, 36 times is for current contribution or average of basic.
So the eligibility is calculated on your average of basic, not your contributions. So 36 times your basic. And if you
But your
move
current
from
basic. So I think the confusion is it the latest salary slip or it is the average of 5 years, right? It's the latest salary slip, the basic.
yeah, the latest basic, whatever you've declared in the current company, that will be considered. And if you've merged your PF, then there's a most likely it has been merged. If it hasn't been merged, there's a provision for checking the records through an Excel key.
Yeah. So basically, unlike the EPF balance where you see the previous company going to zero, like the balance there and the
Mm.
amount being added to your current company, the EPS does not have a monetary change. Like you don't see numbers, money being transferred. You just see the service history being merged. That too, it's not so obvious, but you have to assume that it's being done at the back end. If you're not still convinced, then as Ketan said, you can download an extra K. How do you download an extra K, Ketan?
So you have to request it from the PF office. It's not readily available because a majority of the cases it does get transferred. So yeah.
Okay.
Okay, so next question is anonymous. Can you please explain clearly how much money can be withdrawn for house by an example calculation?
Okay. So let's assume and you're eligible. That is, you have more than 5 years of contributions in PF. And let's take your basic salary or basic plus DA as 1 lakh. In this case, you are eligible to withdraw 36 lakhs from employee plus employer. Both combined, you can withdraw maximum up to 36 lakhs.
Okay, so next is from Kunal. I have left my job 3 years back. Is it good time to withdraw my EPF and manage myself? Does the fine print help with this?
Withdraw EPF or PPF?
EPF. So I'll repeat.
EPF.
I have left my job 3 years back. Is it good time to withdraw my EPF and manage myself? Does the fine print help with this?
Okay, so since you have left your job, and I'm assuming that you're not working for another employer which is under the EPFO, you are getting interest every year, but it's taxable. So again, going back to that example, if the gross rate is 8.25%, which it is, your net post-tax rate is 5.5, let's say. So you can do better than that for sure through mutual funds. Do we currently help with that? No, we might in the future, but at present, unfortunately, we don't. But if you reach out to us, we might try and connect you to somebody who does.
And we can help with your EPF withdrawal.
Yes, we can help with that.
Yeah. So next question is from Sandesh. I have 17 years of service and I have switched four company. How I come to know all companies PF is consolidated and where I will find it.
So you can log into the EPFO passbook portal where you can go and check if all the company's PF account has been merged into the last account. Essentially, you will see transfer request as settled in your passbook and see the balance amount reflecting in the current organization if it has been merged.
Yeah, I think everyone should note here EPFO has two websites. There is the passbook portal, which is separate, and then there is the EPFO website, which is separate. Don't know why this is the case, but make sure you go and log into the correct website.
Sure.
Yeah. So next question is from Yugal. For the withdrawal limit tied to wages, is it calculated on the latest month's salary? For instance, if someone has only 5 months of service, how will the equivalent of 36 months wages be determined?
So it is calculated, unfortunately, on the current salary that you have. So whatever you have in the last salary, that will be multiplied by 36.
And you need to have finished 5 years in the EPFO. So if you only worked for a few months, you can't withdraw it for home purchase.
Right.
Question is anonymous. Suppose my CTC is 10 and my basic plus DA is 5 lakhs. So I can withdraw 5 into 3, 15 lakhs.
You have to,
No,
Ajay, right?
monthly. I think the confusion
Monthly.
between monthly and annual.
Yeah, so 5 divided by 12 into 36 again, that will come around same 5 into 3.
Hmm.
So I think it'll match, but yeah, it's calculated on monthly, how much a basic monthly you're contributing into 36 months.
Yeah. So next question is Yugal. Is VPF also considered a part of employee share for withdrawal limits?
Yes, you can. If you've contributed to VPF, you can withdraw from your employee share. VPF is deposited into employee share and you can withdraw from it.
Okay. Next question is, if I'm earning beyond 15,000 per month and joined after 2014, can I tell my employer not to deduct EPS and route that to EPF only?
Yes, you can, and you should. Matlab, there should be no EPS contribution if your salary is above 15,000 per month.
Okay. So next question is, if in PPF after withdrawing the deposit, we can again deposit that amount. As mentioned by you in EPF, it is not allowed. What about PPF?
No.
I believe PPF loans are very much possible. So they charge an interest, I believe, 1% above the PPF declared rate. So if it's 7.1, then you're charged 8.1. But those are actual loans that you can pay back. Whereas EPF is, you can't, it's not a loan, it's just a withdrawal.
Correct.
So next question is, I have heard that EPFO has separated the withdrawal of EPF and EPS in the online portal just because of the issues many are facing on their EPS service history, which was blocking the withdrawal. Earlier on, the EPFO used to insist on both applications together.
So what you're mentioning is correct. There are two separate provisions for PF withdrawal and EPS withdrawal, but essentially they are interlinked because technically the employer PF corpus and EPS are both contributed by the employer. So you are contributing 12% of your basic plus DA. The company is also contributing 12%. The company's contribution is getting split into two parts. One is going into PF and the other part is going into pension. So if you are running into issues with pension, technically your EPF corpus also has issues because either the money will come from pension into your employer corpus or your money will go out from employer corpus into EPS. So the challenge still remains.
All right. We are actually now close to the end. There we can take maybe 3 more questions and close it. So folks, if you have questions beyond this also, we are very much there. You can reach out on the QR code that's on your screen.
So next question is, how can we withdraw EPS before 10 years?
You cannot. There's no provision for withdrawing EPS before 10 years.
No, you can. No, EPS, he said.
EPS. Oh,
EPS.
sorry, sorry. Oh, I'm sorry. My bad. EPS, you can withdraw before 10 years. After 10 years, you cannot. My bad. So you have to apply. If you're not currently working, you can apply for a form 10C online and then withdraw your EPS.
Okay, so next question is interesting. When you request for merger, do you receive interest for the period till merger?
Yes.
When you correct, yes.
So one thing about interest is even if you've not got the interest credited into your EPF account, don't worry. If you submit a withdrawal, they will pro rata credit the interest first and then give you the withdrawal.
Same for the transfer request. If you're transferring in the middle of the year, they will add up the interest that is there from the transfer request. Yes.
Okay, so the last question we address is from Manish Kumar. I am a PSU employee. I saw VPF pension 2% in deduction of a few of my colleague payslip. What is that? I don't remember asking for an option from my employer.
You
So
must have
VP,
some form. I can't imagine this happening without somewhere some form being filled and signed.
yeah, because VPF is voluntary. So members' consent must have been taken before contributing.
It might have been buried somewhere in the joining forms.
Yeah.
Okay, folks, thank you so much for joining us for this first session on EPF. Let us know how it was. Give us feedback, honest feedback. And if you have any further queries, we are there. The QR code is there. Scan it and we'll give you, as I said, a 1 hour consultation. And if you have a deeper issue where you need FinRight to do the entire withdrawal process, that extended service is also separately available. So that we'll establish in the 1 hour call that we're offering. All right, guys, thank you so much.
Yeah, thank you. Thank you so much for
Thank you,
joining.
everyone.
Thank you.
Have a great day.